The camera fades in on a vast digital landscape, glowing numbers scrolling across blockchain nodes, humming servers, and charts blinking like traffic signals in a cyber metropolis. The world of DeFi isn't quiet anymore. It's noisy, crowded, saturated with hype. But somewhere in that chaos, a pattern is emerging, and its name is AFX. AFX, the token that seemed like just another DeFi player, is now commanding attention from every corner of the cryptosphere. At first glance, it was modest. Modest supply, modest community, modest ambition. But behind that minimalist white paper was something more profound, a roadmap designed for disruption. The story of AFX doesn't start with hype, it starts with quiet building. Before influencers posted thumbnails screaming 100x potential, before bots pumped Telegram groups, AFX was being quietly engineered for long-term infrastructure. With a fixed 100-day token cycle, real-time burning, community staking pools, and a unique hybrid between CX and DeFi dynamics, AFX was daring to be different. As of now, its price sits at $0.08637. Not the peak, but not the valley either. Investors are whispering, speculating, calculating. Some say this is the calm before the next parabolic storm. Others warn it's the eye of a storm that hasn't passed. What makes AFX different isn't just the technology, it's the philosophy. AFX integrates an AI-powered trading bot that mirrors institutional logic, data-driven entries, emotionless exits, and pattern recognition far beyond any human scalper. But can it really outperform the market? Let's zoom into its core mechanisms. The AI bot monitors over 40 pairs simultaneously, feeding decisions into a smart contract that executes micro-trades with minimal gas fees. This isn't just theory, it's deployed, running, producing weekly snapshots. In the last 60 days, it's hit an average win rate of 63%, with a 1.6 to 1 reward-to-risk ratio. Not flashy, but consistent. Yet consistency doesn't drive cryptomania, speculation does. And the AFX community knows this. That's why we're watching closely for the most anticipated event on its roadmap, the potential CX listing within the next quarter. If listed, AFX opens the floodgates to volume it hasn't yet seen. Traders who don't care about white papers or staking mechanics. Just price action, liquidity, FLMO. But with that attention comes danger. The same wave that lifts small-cap tokens into orbit often crashes them back to Earth. And the countdown has already begun. Let's talk risk. AFX isn't immune to the same forces that have decimated dozens of DeFi projects before it. One central concern? Over-reliance on the token's 100-day cycle. It's brilliant in theory. Every 100 days, the supply resets, burns occur, and staking adjusts. But in practice, it risks becoming predictable. Markets punish predictability. If whales or early adopters can anticipate sell-offs, or if new investors only buy in early cycle phases, it creates artificial volatility. Some community members have already raised red flags about how visible these cycles are. But the dev team responded with transparency, tweaking mechanics to reduce timing exploits. Is that enough? Then there's the issue of centralized control. While AFX promotes a community-first ethos, the reality is that a handful of wallets hold a significant portion of supply. Not unusual for early-stage tokens, but definitely a pressure point. A single whale's exit could slice the price by 30% or more. And yet, they haven't sold. Why? Because the community behind AFX isn't just passive. It's strategic. We're talking Discord analysts running simulations, Telegram traders charting Fibonacci retracements, and YouTube creators posting cycle breakdowns weekly. This isn't your average meme coin crowd. This is a data-driven cult. Now let's return to the AI bot. This isn't some off-the-shelf tool. It uses reinforcement learning, meaning it learns from each trade. The more it trades, the sharper it becomes. Think of it like a hedge fund analyst that never sleeps, never panics, never checks Twitter. Just cold execution. It's even being benchmarked against standard indicators like RSI, MACD, and Bollinger Bands, and outperforming them over 12-week intervals. But here's the million-dollar question. Does that justify the token's future value? The AI isn't token-locked. If the devs open-sourced it or license it externally, the AFX token becomes just one of many utilities in a larger product. Investors want assurances, and that's where staking comes in. Long-term staking isn't just incentivized, it's integrated. Stackers earn rewards not just from price growth, but from AI bot profits and ecosystem fees. This means the longer you hold, the more income streams you unlock. It's an investment model designed to grow even in bear markets. And that's the paradox of AFX. It's simultaneously speculative and stable, a rocket ship with parachutes. So what happens next? Let's examine the roadmap. The next 90 days include finalizing Phase 2 of the AI infrastructure, launching a gas-efficient mobile dashboard, opening up AFX referral bonuses to expand community adoption, and potentially the most explosive event, CX integration. If that CX listing goes live, AFX could see a 3x, 5x daily candle. We've seen it before with tokens like Floki, Shiba, even Bonk. But what separates hype from sustainability? Utility. AFX isn't trying to become a currency. It's trying to become a platform, a protocol where staking, AI trading, lending, and vault rewards all converge. And that means it must survive scrutiny. The developers have pledged to undergo third-party smart contract audits, a critical step. After the DeFi rug pulls of 2021 to 2023, transparency isn't optional. It's survival. Community AMAs are increasing. Governance voting may be implemented. The vibe is shifting from early adopters to ecosystem builders. But price is still king. The real countdown isn't to the CX listing. It's to the moment where retail buyers start chasing green candles. When TikTok traders start posting, I bought AFX at 30 cents and sold at $1. That's when narratives override fundamentals. And the community must be prepared. The devs have hinted at protective mechanisms, anti-whale tax, staking lockups, token burns. These are defense tools. But offense? Offense is marketing, memes, momentum. And AFX has already shown it can trend with the right spark. So what if, just what if, this is the calm before ignition? What if the real pump hasn't even begun? Because behind the charts and wallets is a growing realization. AFX might not just be another token. It might be a template. Let's zoom out. It's 2026. The AI trading bot is managing $50 million in volume across 14 chains. The mobile app is top 200 in finance on the Play Store. Staking rewards are distributed daily. The CX listing? Confirmed. And a DeFi NFT marketplace built on AFX gas fees is in early beta. Far-fetched? Maybe, but maybe not. Every major crypto success, Ethereum, BNB, Solana, started with a phase where nobody outside the echo chamber cared. But the insiders? They were building, talking, staking, waiting. AFX is currently in that phase. At $0.08637, you're not early, but you're not late either. You're in the compression zone, where most ignore, but the patient accumulate. The next 90 days will either make or break this project. And the clock is ticking. So ask yourself, are you here for hype? Or are you here for history? Because one way or another, whether AFX explodes or collapses, the crypto world will remember it. As a warning, or as a blueprint. This is the great disruption. And it's already begun.